Smart Money, SMSFXmentor.com, right? So we are back with another video, okay? Today is going to be something very, very simple, but something that's very, very useful, and it could be very, very useful in your trading strategy or in your arsenal, okay, guys? And the first thing is going to be the Hakanashi, all right? So some people like to use Japanese candlesticks, and some people like the Hakanashi because it's just a smoother flow. It actually can it shows you the actual trend, whether it's a bearish trend or a bullish trend, right? And more than likely, you want to take trades based off the flat tops or flat bottoms, right? So when price is flat top to the downside, you want to try to continue to go take price to the downside after you pretty much know the overall trend, the overall bias, right? After you do your top-down analysis and everything of that nature. Same thing vice versa. So if price is going to the upside, you want to get in on the flat sides of the Hakanachi, okay? And then you want to ride that bad baby up until you kind of see like a reversal or something, or price hitting some point or a certain confluence that you have lined up, okay? But like I said, if you don't want to go through all the riffraff of the Japanese candlesticks, then you can definitely use the Hakanashi. And then I'm pretty much about to show you guys exactly how you can use it step by step. All right. So without further ado, let's go ahead and share the screen with you guys. Boom, go to share. Boom, we in there. And so now we pulling up. We've been pretty much going over Aussie dollar. So, we're gonna stay with that. So the Hakanashi, right? So you're probably familiar with the three popular chart types: line charts, bar charts, and candlestick charts, right? But there's another type of chart that you should know about that uses a totally different technique to display price action, right? And that is the Hakanashi, all right? So pretty much we're finna get off into that. Um, so the Hakanashi candlestick chart versus traditional Japanese candlestick charts. How is Hakanashi different from a typical candlestick, right? So let's learn the difference between a Hakanashi candlestick versus a traditional Japanese candlestick chart. All right. Um, so pretty much let's go ahead and show you guys what a traditional bar chart would looks like. Um, well, Japanese candlestick. So we see like a lot of red, blue. We see a lot of different hikes, spikes, all that different good old stuff. Okay. And you see how prices pretty much, reacting to certain points in the market, right? Rather than here go a picture of excuse me, the Hakanashi, right? So you come over here, you go to your not indicators, you go over here to the candlestick right here, and then you push this little bar down, and then you go over here and you find Hakanachi, right? So you can literally start it so that you'll always be able to catch it, or it'll always be at the top, or it'll be in your favorites, right? So you just be able to go to your favorites, boom, click on it, and you're good to go. So now this is the difference between um um a bar chart or Japanese candlestick and Hakanashi. All right. So as you guys can see the difference. And this is what I mean by flat top. So it's flat tops all the way to the downside until you start seeing some crazy stuff like that. Same thing for the bottom, for the bottom going to the upside. You see these flat sides right here, boom, 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 boom. Less noise. Okay, so it kind of delete the noise. Still the same thing, still the same gesture, but it kind of delete the noise that you have dealing with obviously these type of candles or the market, right, when it's doing whatever it want to do, especially when it's moving sideways. Okay. As you guys can see, just a little bit of green, still a little green in there, but just a little bit, and it gives you those boom, 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 boom. But it does not justify the exact price. Okay, guys. So that's where you'll get a little confused at, all right. When dealing with them. So how to calculate them, right? So how to calculate the Hakanashi, right? So um um pretty much pretty much what you're doing, guys, so with traditional Japanese candlesticks, right? Each candlestick represents the open, the high, the low, and the close. Okay. So that's pretty much, you'll get a body, you'll get an upper shadow, you get high, you get a close, you'll get a lower shadow, which is, wicks, right? So let's go back to um regular candlesticks. Go back to regular candlesticks, and you kind of see how we have upper shadow, right? And then you see how we have a lower shadow, right? So then we have the open right here, and then we have the close right here. So that's pretty much what you're looking at in a traditional, right, Japanese candlesticks. Okay. Whether with a Hakanashi candle charts, each candlestick doesn't just include price movement within the current time period. It also includes price information from the past. Okay, so pretty much it's giving you it's almost like a lag, but at the end of the day, like I told you guys, if you understand flat tops, flat bottoms, I mean, that's pretty much how you really use them. Okay. I mean, without a problem. And so um, you know, the Japanese candlesticks, so everything is similar, everything is the same, except right, the open and close are calculated differently. All right. So, you got the open and close on price. So you got the open price of previous candle, and you got the close price of the previous candles, right? And then on the close, you got the open of the high, plus the low, plus the close, right? The high of the Hakanashi candlestick takes the actual high, okay, of the period. This could be the highest shadow, the open of the close, whichever is the highest, okay? So when price is pushing up, pushing up, pushing up, you instead of seeing like that open close, how price go up, boom, it open up, and you see that shadow, boom, boom, and open. Instead of that, with the Hakanashi, right, you'll start seeing price literally just going up, 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 almost like without that close and open and stuff and all that movement, you'll see like price just coming from that point, that number going up, going up, going up, coming back down, coming back down, coming, and then close, and then it'll literally open back up right then again and start doing the same thing all over again. Um, so the high is the maximum price reached, and then that's it. So as soon as price gets to that certain point, boom, that's it. It's closing. And the low of the Hakanashi candlestick takes the actual low of the period. This could be the lowest shadow, the open, or the close, whichever is the lowest. So once that candlestick closed, so let's just say it went up high and went up to this point. Once that candlestick closed, boom, that is the high. It's going to close at that highest point. It's not going to close exactly where it's at on price, right? It's going to close at the highest point, go to the next candle, next candle, next candle. Lowest point is going to close at that lowest point, and it's going to go to the next candle, next candle, next candle, instead of like the open and close, like opening and then closing at whatever. If it went up and it came back down, boom, it closed. That's where the Japanese candlestick would stay at. As far as Hakanachi though, wherever that highest point went on that last hour candle, 4 hour daily, it's going to close at that point. The lowest that it went is going to close at that point. All right. So the minimum price reached, the general idea behind the Heikiashi candlestick is that they smooth the price action. So pretty much it signals, it gives you that signal. Much of the market noise shown, the traditional Japanese candlestick charts are minimized within the Hakanashi candlestick charts. Okay. So that's pretty much the big difference. So how to use the Hakanashi chart. Um, how to use and read a Hakanashi candlestick chart. The idea behind using a Hakanashi chart is that it's filtered market noise, right? And since noise is filtered, you basically see the naked trend. Okay. So pretty much that's pretty much how you use it. So let's just say you're in a buyer, you get to a certain point where you want to enter into the market, and then you use a Hakanashi candlesticks, right? And you're starting to see that the patterns, or you starting to see the flat tops or the flat bottoms starting to form right above whatever point that you have in the market, or whatever point that you're getting into the market. So pretty much you'll start seeing that overall trend. You start saying, okay, price going up. You'll say, okay, price going up. Boom. On the Hakanashi, you'll see the strength in that price. You won't see as much red. So like just like I said, so just like for Japanese candlestick closes and it was bearish, right? But it was still higher than the last candlestick. With the Hakanashi, you'll still see a green candlestick. Okay. So that close and the next one, you'll see that the highest point that it went to, not just so if it went all the way up and it shot back down and closed, it'll still be all the way up when you see that next candle. Okay. So that's what you got to understand. That's what you got to get. It's not really too precise on exact what price is. So if you got like if you're more than likely using proper risk management, it won't actually give you. You might say, okay, boom, why dang it almost hit my take profit remember that on a Japanese candlestick, it might have went back down and closed at that point. But like I said, it'll actually show you the overall trend so that you'll be like, okay, I'm cool. I'll stay in this trade because I'm pretty sure the price is going to continue to go in this direction. All right. So it's just very, very smooth. So because the Hakanashi candlestick are calculated based on averages, the candlestick will have smaller shadow wicks than a regular Japanese candlestick. So that's exactly what I just explained. Just like regular Japanese candlesticks, with Hakanashi candlestick, the smaller or shorter the shadow or the wick, the stronger the trend. So just because you see it smaller and smaller or getting smaller as it's going or whatever, it's still going to show you green, right? All the way up until prices is probably finna change directions or probably finna come to a halt. So green candles with no longer shadow signals a strong uptrend. So that's what I was talking about, the flat backs or the flat bottoms or the flat tops, right? And the red candles with no upper shadows signal a strong downtrend. So exactly what I said. Just giving you guys FYI, right? So the Hakanachi charts are used by technical traders to identify trend direction and trend strength. So pretty much you'll come on here. Let's just say you're seeing price coming down here and you're seeing a lot of riff or raff right here. You'll come over here and you will change it to Hakanachi and you'll say, okay, wait a minute. After this little wick right here, this last little wick and the second candle maybe closed or whatever, you can kind of see the trend is continuing to go down. All right. So just simple stuff like that, right? So we got that. We went over that. Um, um, so how to trade using Hakanashi, right? Um, how do you trade using Hakanashi? Using Hakanashi chart make trends easier to identify, right? So once you already so pretty much understanding, identifying the trend is how you're going to make your money, right? So if you know that, okay, price is going to the downside, despite all of these wicks and all of this stuff like that, you still know price is going to go to the downside. So when are you ready to get in? When you start seeing these flat backs, when you start seeing these flat backs, you're able to get in and be able to take price to whatever you need to take price to your 1 to 3, whatever you trying to do or put off in the market, and that's what you're going to go ahead and run with, right? Because pretty much it's going to identify the strength of the trend. That's the main goal of it, okay? Um, Hakanashi allows traders to look for the emergence of a new trend or for the reversal of already existing trend, okay? So that's pretty much pure steps on how you would want to do that. So green candlesticks signal an uptrend, right? So if you start seeing green candlesticks, probably pretty much price going to try to go up to a certain point. So you have to be on point and be careful with that, right? When the Hakanashi candles changes the red bearish or to green bullish, it's a sign that the price might be about to turn higher. Okay. So I'm gonna say that again. When the Hakanashi candles changes from red, okay. So it's coming from red, it's going down, 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 down. It changes from red to green to a bullish, right? To green, right? Which is a bullish signal. It's a sign that price might be about to turn and go higher. Okay, guys. Same thing vice versa. So if you're currently in a short position, you may want to exit. If you're currently in a long position, you may want to add to your position. Okay. So, so if price is already going up, but then it start going down, you start seeing the red candles and it's just a pullback or something like that. And then you start seeing the green candles again, boom, that's your chance to go ahead and continue to go higher. So green candlesticks with no lower shadow or wick indicates a strong uptrend. Okay, guys. So no wicks on the back, no wicks, no wicks, no wicks. Strong uptrend. No wicks, no wicks, no wicks, right? Pushing up. No wicks, no wicks. No wicks, no wicks. Hella wicks right here. Hella wicks right here. But as you guys can see, price continue to still go up. So that's why you cannot just use these based off of just using them alone, okay? So stay long and until the Hakanashi candlestick changes color from green to red, ride the uptrend as long as no lower shadows appear and let your profits run. Okay, so candlesticks with small bodies showing upper and lower shadows indicates a possible trend reversal. So you'll see a lot of spikes, a lot of crazy little spikes, right? Start popping up. Okay, so price coming down, spikes, 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 boom, they go to reversal. Same thing here. It's coming down, spikes, 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 boom, they go to reversal. Okay. So same thing, vice versa. Spikes, 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 boom, they go to reversal. Spikes, 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 boom, they go to reversal. You see what I'm saying? So you got to pay attention both ways, all right? So open position opposite the current trend, since the trend may be becoming to an end. keep in mind that though, if the next candlestick changes color, it does not always mean the end of a trend. It could just be a pause. Okay, so price could just be so. Just sometimes it's like just like here. It's going down, price coming up right here, price start coming up right here, and just a nice little pause where price let it pause that at this level, and then obviously continue to go down. Does not mean that it was finna turn all the way around and continue to go more up and more up, right? So sometimes you just got to make sure that you're paying attention to that. Same thing is here. Just because it's going up and you start seeing the wick rejections and this and that and the third, obviously, it's not going in a full reverse and it's just about to go up. No, it's just literally at a pause for right now, at a halt or at a consolidation, or it's going to be at a liquidated point in the market where it's going to collect liquidity and then obviously continue to go down the other direction. All right. And so that way, and when that type of thing happen, that's when you want to either add to your trade or you feel me, take whatever you already was consistently finna take. So if it's 1 or 2, 1 or 3, 1 or 4, just take your profits and get out of the market. So red candlestick signal a downtrend. When Hakanashi candle changes from green bullish to red bearish, it's a sign that the price might be about to turn lower. If you're currently in a long position, you may want to exit. If you're currently in a short position, you may want to add to your positions. All right. So red candlesticks with no upper shadows or wicks indicate a strong downtrend. So, like I said, no upper wicks, boom, boom, boom. Price is steady going down, steady going down. Be careful for the wicks underneath because we know something's coming. But same thing here. Um, same thing here. Same thing here. No wicks, no shadows. Okay. So just be paying attention to things of that nature. All right. And then um last but not least, limitations of the Hakanashi, right? So what are the limitations of the Hakanashi? Uh Unfortunately, Hakanashi is not the holy grail, right? So Hakanashi definitely ain't no Ed Sheeran song. It ain't perfect, right? So just like any other tool used to technical analysis, Hakanashi is useful, but it does have some weakness of limitations. All right. So Hakanashi candlesticks do not show true prices, right? So with the traditional Japanese candlesticks are derived from actual prices. Hakanashi candlesticks are not. All right. So that's the difference, right? So because the Hakanashi candlesticks are average, they do not show the exact open and close prices of particular time periods. So you feel me? So pretty much I want to show you guys a quick example of let's go right here. And then well, okay, so let's go right here. And we'll look at the open and close here. We'll even mark it off. So we'll mark it off. We'll come over here and we'll do open, close, open here, or close there. And then the open here, right? And so then what we'll do is so you see, focus on the last candlestick. A couple of things to notice. The candle is green, right? Which means the candle closed higher than it opened. All right. Its open price is uh we got it on here. Is 5934, and then its close price is 5978. Okay. Now let's look at a daily chart on here on Aussie dollar, all right, as a traditional Japanese candlestick chart. So let's go ahead and go to traditional, or we might just click right there, go to traditional. Now you guys see that, okay, it was just a bullish, right? It was just a bullish market on the Hakanashi, right? And the open was at 59.34 and the close was at 59.78. But in all actuality, when price really opened or closed that, so price really opened here, right, at 5984, and it really closed here. Okay. So now you guys kind of see the difference. And this is the true value. This is the true price where price opened and closed at. So if we go back to Hikanachi, boom, we way off, right? So, that's most important. That's the things that you really want to pay attention to. And that's the things that you really want to understand before trying to grasp this concept of using the Hakanachi. And it's not too difficult. It's something that really can help you. But what you got to understand is that, you don't use it just as is. That's what we try to teach. We try to make sure that you guys understand that it will be just the confluences added to your everyday routine, your everyday trading style, your everyday thing that you do every single day. So like guys, I'm about to go ahead and end the video on that note, smsfxmentors.com, right? So if you want to mentor and you want to dig down deep and dive deep into this type of stuff and break it down segment by segment and find out what really works for you guys, risk management, time frames, scalper, intraday trader, etc. Right? Um, if you want to get in and out the market at like I do, you want to know what sessions to trade, what pairs to trade while you're trading those sessions, things of that nature, guys, then that's where we can go ahead and dive in deep and we can get to it. And I can show you guys how to pretty much make a bag at your time, at your pace, right? Because what Forex is an understanding for you. Everything that I do will not always help or affect what you're doing. Okay. So you got to understand that and remember that as well. So I'm just a mentor. I'm here to hold you accountable. I'm here to hold myself accountable, but we're here to work as a team, as a unit. And if you're interested in anything like that, hit the link in the bio. Go ahead over there, check out the free course, take the free course. After you take the free course, go ahead and join the mentorship. Go ahead and join the community of multiple traders that's on the same level that's here and we're willing to help. All right. So smsfxmentors.com. Let's get it. Gang, gang, gang. I know what time it is, man. I'm not even gonna keep telling y'all, man. All right. Don't wait till it's too late. Let's get it.